Hey boss, it's Steven, your honest trading coach, and today I'm going to be teaching you how to trade the hourly chart. I never thought it was possible to day trade on lower time frames like the 1 hour and 15-minute chart while also having a full-time job. Up until a few months ago. A few months ago, I developed a strategy that's actually been in development over years of my trading career that's been giving me some incredible results. Over the past 4 months, I've traded this strategy and the outcome has been amazing. And this is literally what I consider the best strategy to trade if you have a full-time job. Now, as I said, this took me years of trading experience to develop, but instead of it taking you years to develop this strategy, I'm gonna be teaching it to you over the next 15 minutes. Sound good? Great, then go ahead and click that subscribe button down below the video and the notification bell to be alerted when we come out with more free content just like this. If you're already subscribed, then it's a pleasure to have you back. Let's get started. I had a trade yesterday on the euro dollar using the exact strategy I'm going to be teaching you in this video. So first, what we're going to do is take a look at a clip from yesterday, me placing that trade. Then we'll come back to the euro dollar. I'll explain the entire strategy to you, and then we'll take a look at the results from that euro dollar trade and get into the rest of the video. So I'll be right back after this. What's up, traders? Right here, we're on the euro dollar. I'm looking at this as a potential buy. So what I'm going to do is go ahead and open up an order, create a new order. We're looking to buy. We're looking to buy at market. Looking to buy at, I just hit stop order. Oh my God. Looking to buy at market. So I'm going to go ahead and put my stop loss in. It's going to be 18 pips. I'm going to go ahead and throw the target on here as well. We're looking at a 2-to-1 on this one. So 36 will be the take profit. We're going to risk 1% and go ahead and click the buy button. There we go. Involved in this trade. I'll keep you guys updated on how it plays out. And I'm going to do a full tutorial on this whole strategy. So I'm sure we'll be getting back to that right about now. So that was our live trade from yesterday. What I'm going to do now is break down the full strategy, and then we'll take a look at the results from that trade. With this strategy, we're going to be looking for two very simple setups. On these setups, we're going to be utilizing multiple time frames and the 50-period exponential moving average. So if you're comfortable with that, then let's get started and go over setup number one, which is what we utilized to get in that live trade you just saw on the euro dollar. So here we are on the euro dollar. We're actually going to take a look at that setup. And on this pair for setup number one, what I'm looking for is if the market is trading below the 50 EMA, which is this blue line you see right here on my screen. If the market is trading below the 50 EMA, then I'm looking for buy trades. And I know that makes no sense right now, but trust me, it will in just a second. I'm not just looking for buy trades anywhere or just based on some random price action pattern. What I'm going to be looking for, if we are below the 50 EMA, is my next level of major structure that the market will inevitably hit if we continue lower. So if the euro dollar is right here, let's put a horizontal line on the screen, and it's going to continue lower, inevitably, what level is it going to hit if it does continue lower? If you said this level right here, you would be right. And the level I picked, I'm going to explain why and how I mark these levels off, because that's a question I get all the time. My level for this particular trade looks just like this. And I'm going to go ahead and put a box here to make it easier to see. This green box is the level I'm paying attention to for long trades on the euro dollar if price is right here. This is that full strategy. So if the market's right here, I look below and I find the next level of support and I find a way for it to touch multiple times. That is a must. This level of support must have been tested multiple times. And if it has been tested multiple times, I want the lowest bodies of the support level to be touched with my level, my box that I draw. So in this case, we have one touch, we have two touches. That means in this area is where I'm looking for possible buy trades. Here's the second part. We've now utilized the 50 EMA. We're utilizing a major level of structure support. And what we're looking for at this level is not a complete reversal. We're not looking for this market to head higher and start trading way up here. I'm looking at this level to provide a bounce before trend continuation to the downside. With that being the case, this is when we utilize lower time frames. So we push down, we're now closer to my level. We're actually in the level now. And what I would do at this point, hopefully you're following along, hopefully you've taken notes up to this point, is right now, my other two conditions are already met. We're trading below the 50 EMA. We're at a major level of structure that's been tested multiple times that I'm looking for a brief bounce out of. I'm going to go down to lower time frames and look for possible entries. What are my possible entries? They consist of double bottoms, hammer candles, buying pressure of some kind. A big green candle would be fine. So let's push the market forward here. We get nothing there. Market pushes up a bit. Let's hit play to make this a lot faster. Market pushes down. And there we go. Okay, right here, this is exactly what I'm looking for. I know we bounced out of my area just a little bit, but that's totally fine. We came out of it, and then the bulls, after this bearish move down, I'll zoom in on this. After this bearish move down, bulls took over directly afterwards, creating a big green candle. This candle has a lot of momentum, and this candle is a place I would put a buy trade using this strategy. So let's count it off. We have a market trading below the 50 EMA. We have a market at a major structure level. While we're here, we're waiting on just a little bounce before the market continues in this downtrend. Since we're waiting on this little bounce, our confirmation is show me buying pressure. Big green candle in this case. With this big green candle, I would have a stop loss below this swing low. For me personally, I put my risk to reward at a 1.4 to 1. This is a little bit like what my trade would look like in this scenario. Market pushes up, hits that entry, hits that target, my bad. So now you've seen what that looks like. I'm actually going to show you our live trade. Let's bounce out to the 1 hour chart. Our trade actually happened a little bit lower. And what I want you to do right now is tell me what you would be looking for. We're below the 50 EMA, right? If we're below the 50 EMA, I'm looking for my next level of support down. Here is a very important note. I'm looking for my next level of support that was not the level that provided the pullback, okay? Because if we're going to continue this downtrend, then inevitably we will break and close below this support level. I'm not looking for buy trades at the level where the pullback started, the most recent pullback. That's something to definitely write down in your notes. So I wouldn't be looking here. If I'm not looking there, let's put a horizontal line on the screen to make this really, really easy. If I'm not looking here, then I have to look left and lower. Where's my next level? You guessed it, it's right there. So for me, this level would look something like this, because that's the place I can get the most touches. I have 1, 2, 3, 4 touches if I put my box, my area right there. So in this area is where I'm gonna be looking for possible trades, and you're about to see exactly what happened on the trade we took yesterday. Okay, so here it is. We've gotten into my zone. Remember, this is the area I just said, and you saw the trade from yesterday that I was looking for possible trades in, right? If this area is an area I'm looking for possible trades in because we're under the 50 EMA, we have a major level of structure. We get there. I'm expecting a bounce out and then a push further down. All of that lining up, I went down to a smaller time frame on that trade. The analysis behind it is that I went down here and I found a double bottom that was right here. I noticed that my entry was going to be right here on that double bottom. Exactly as I explained earlier, I'm looking for price action patterns in these levels. And that price action pattern, while in this level, was right here with this double bottom. So we have that double bottom. Let's see what the market actually did. And if you'll notice from the live video, I actually got a late entry. I saw that double bottom way after that it actually happened. So I got a later entry way over here, but that was the reasoning behind the trade. So let's continue and see what happened with this market. My entry, obviously this hit targets. My entry though was right here on that next candle because I could get in right at where I would have gotten in on the original trade. So that's the euro dollar trade, and that's the first setup of this strategy. Again, guys, I've been trading this for the past 4 months and it has shown some excellent results, insane results for me. That's no guarantee it will for you. This is just something I wanted to share with you because it's been very beneficial for me. And if you have a full-time job or prior obligations, I know it's going to be extremely beneficial for you as well. So that is setup number 1. Let's move on now. Let's talk about setup number 2, and then we're going to dive into the timing aspect of this strategy and how you can implement it into your trading even if you have a full-time job. Let's look at setup number 2 right now. If you've enjoyed the video so far, go ahead and click that like button for me and leave a comment. It does wonders for the YouTube algorithm so we can get this word out, this strategy out to all the traders possible, all the traders that we can. And here we are looking at the Aussie New Zealand. I'm going to show you setup number 2, which is a trend continuation setup. Earlier, for setup number 1, we were looking for levels of structure, looking left, that would provide a bounce before trend continuation. This time, for setup number 2, we're actually looking for trend continuation. So on the chart in front of you, let me define the rules first. The rules are market must be trending below the 50 EMA. So right now we're breaking through structure levels below the 50 EMA. That's our first setup. The second, or our first rule, the second rule is that we have to pull back to the next major level of structure looking left that could provide resistance for this market. You tell me where you think that is. I personally define major levels of structure as a recent level that's been tested multiple times. What do we have right here on the hourly chart? If I'll put a box here that's red, it'll probably make it easier to see. Right here on the hourly chart, we have a recent level of structure support that was broken below. Now, this level has been tested multiple times as support. And if the market gets back up into that level, do you think we have a good chance of the market using that level as resistance and falling from that level to continue this overall downtrend? I do. That's the way I trade. So that's exactly what I'm looking at here. Let's push the market forward. And remember, we're not only utilizing the 50 EMA and structure levels, we're also utilizing multiple time frames. So it's important to note that you're not going to be trying to get in on the 1 hour time frame, because if we do that, for us to hit our targets, we probably have to get all the way down to this level and maybe even break that level. But if we go down to lower time frames, we can get a little push out of this zone, and this will hit our targets if we have an entry right here, and we can still get our 1 risk for our 1.5 to 1 risk reward, or whatever risk reward you decide to use. That's why we utilize multiple time frames. Let's keep pushing forward. Now we're in our zone. At this point, I would drop down to smaller time frames at this exact point. And that time frame would be the 15-minute or the 5-minute chart. At this point on those time frames, I would look for selling pressure. Does this look like selling pressure? Well, yes, it does. This is a momentum candle that closes below the previous candle, and most of the body of the candle is red. Another hint that it's a momentum candle is that the bottom wick is tiny. If we have a small bottom wick, that means at the close of this candles, bears were taking over, and they didn't allow the bulls to push the candle up anymore. Just a little story about candles for you. But the trade itself here would be on the close of that candle or the open of the next candle, we would have an entry. We'd have a stop above our zone by a few pips. And we would have a target, like I said, I normally do about a 1.4 to 1 risk reward. Let's hit play. Market came up, got close to stopping us out, but that's why we keep our stop loss above our zone. So we have our stop loss above our zone. We didn't get it hit. And instead, the market pushed down, pushed up, played with our emotions, and then eventually hit targets. Now, I know I've shown you winning examples. Of course, this strategy and no other strategy in the world will always win. It's important not to go out here and start trading this right now. Do me a huge favor. Trade this on a demo account using what I'm going to tell you next. Actually, I was going to say trade it on a demo account for a few weeks. Let's dive into the timing aspect of this and how you can trade it while having a full-time job. So let's go back to the euro dollar trade. This is something I've been doing for a few months now, and as I've said multiple times in this video, I can't stress this enough. It has given me outstanding results. That's why I want to share it with you. So for the past few months, I've been looking at my charts between the hours of 6 p.m. and midnight. And between those hours, I'm Eastern Standard Time, by the way, that I live in Atlanta, so it's Eastern Standard Time. Between the hours of 6 p.m. and 10 p.m., there's not a lot of movement in the market, but the spreads aren't terrible. You can still get away with placing trades with decent spreads. So what I do to utilize this is actually place trades during this time. And here's the beauty of it. For one, placing trades during these times between the hours of 6 p.m. and midnight, the market's normally not going crazy. And if the market's not going crazy, it gives you time to actually look through your charts and find the best setups. That's reason number one. Reason number two is that by the morning, for me at least, whenever I go to sleep, I have 3 a.m. Eastern Standard Time. That's the London session. A lot of traffic's coming into the market at that time. I have the overlap at 8 a.m. So with those two times coming in and bringing a ton of traffic into the market and a ton of volatility, 90% of the time, I'm out of the trade by 10 a.m. So it's a way of day trading because you're in and out of the market within 24 hours. And it's a way of day trading that you can do while still having a full-time job. As I said, the spread's not bad between 6 and 12. It gives you time to look for the best setups. And you're normally in and out of the market within a matter of 12 to 24 hours. So technically classified as a day trade. Now, do me a huge favor. Do not go out there and start trading this blindly with no risk management and no idea how the strategy actually performs, what kind of drawdown you can expect. I've tested this strategy for years and I've shown it to you so you don't have to go through the process of developing the strategy. But the process you will need to go to at least is backtesting this strategy. If you're not going to backtest it, do me a huge favor, demo trade this strategy for a few weeks. And guess what? If you demo trade it for a few weeks and your account goes up, fantastic. You found a strategy that works for you. Amazing. If you demo trade it for a few weeks and it doesn't work, you didn't lose any money and you give yourself time without losing money to learn how to better perform in the markets with this strategy. So you understand what I'm saying? Make sure to at least demo trade this for a few weeks before you start trading it live. If you guys are interested in some more advanced training and strategies like this, then I've just opened up a brand new case study group. We just added some new material to the EAP Training Program. So I'm opening up a case study group to get reactions from traders to see if they enjoy the material we just added. With this case study group, we're doing a pretty heavy discount on the lifetime membership of the EAP Training Program. We're allowing about 40 traders in right now. If you want to get some more advanced training and you're ready to take your trading to the next level with a full mentor program hosted by yours truly, then go ahead and click the link in the description labeled VIP EAP Training Program. It would be a pleasure to have you aboard. If not, that's totally fine too. Just make sure if you enjoyed this content, you go ahead and smash that like button, leave a comment below with future video ideas or anything you're struggling with, and make sure you subscribe so you're alerted about the free content we come out with each and every week. Hope you guys have a great weekend. Have a great trading week next week or whatever week it is, because you might be watching this in the future, which really freaks me out, blows my mind. But anyway, talk soon. Have a great rest of your day. Awkward outro. See you guys.